As you guys know, we had a trade challenge running during September. And as part of that challenge, we have been sharing every trade that we take on live accounts in the terminal for the month of September and October. Now, after going through the October trading challenge results, I had a subscriber ask me a question about conviction and how that impacted my trading throughout the month. And I thought the answer I gave them can be beneficial for the rest of the community as well. Now, when it comes to conviction, conviction is something you guys will often hear us talk about in our videos, in our reports, in the terminal. And to break it down, the conviction we are referring to is simply just the level of confidence that we have in a particular trade or a particular bias or a particular asset or event, etc. Now, conviction is a very important part of trading because it's what allows us to sift through the noise and disregard all the mixed signals and the fake outs and just stick to our bias or our premise and do so even if price is moving against us. Now, that level of confidence or conviction that you have is not really something that anyone can teach you, but it's something that you acquire after trading for a while and getting a few trades under your belt. And eventually you'll find yourself in a spot where you can easily spot good opportunities from bad ones based on the conviction that you have for that particular trade, based on the premise that you have. Now, you can only have real conviction in a trade if you understand why you are trading something. And the why is very important because the more solid your premise is for a particular trade, the higher your confidence for that trade will be, and thus the easier it will be for you to sell into rallies or buy into dips when you know that the market is too high or too low based on the premise for that trade. So it's something that is extremely important for you to develop as a trader, but at the same time, it can also be dangerous if you don't approach it with the right mindset. You see, it's important to understand that any trade idea that you generate, no matter how much time and effort you put into your analysis of the trade, no matter how much confluence you see for the trade working out, no matter how much conviction you have in that bias, there's always a very good chance that you can lose that trade. And sometimes it's because you simply get the analysis wrong, and other times you might simply get the timing of the trade wrong, and other times it might just be as simple as the market having a whole other idea to what you anticipated. And for that reason, it's important to stress that even though having conviction is important, always remember that conviction does not guarantee a trade to be a winner. If you go through some of the trading books or articles or interviews written about some of the best traders in the world, you will often see that the ones that lost it all often did so by risking the whole house on that one trade that they thought was just that sure winner, meaning that they had all the conviction in the world, and the conviction meant that they kept on adding to their losing position just because they were so sure that they will win. And it meant that they didn't cut their losers short when they were supposed to. They didn't pay attention, and they paid the price for it. Now, what made me think of this was a trade that I got into on Friday in the euro pound, and another one that I got into in the euro pound on the 20th. Now, the reason why I got into the trade to the downside is because we had some good news coming out on the Brexit front. Now, after holding on to a downside bias for the euro pound for about 5 weeks before these trades, I was so sure that the euro pound would sink on that positive Brexit news. In fact, so sure it would sink that I even added an additional position to both of the trades that I took just because I wanted to add some leverage to the trade to the downside. Now, for those of you who followed along with those trades, you will know that I had 2 euro pound trades. Obviously, the one traded on the 23rd of October and the other one we traded on the 20th. And I sold both of those 2 trades, or sold the pair in anticipation and lots of conviction that it would go down, but of course it didn't. And of course, in classic trading outcomes, both trades would have actually ended up in profit had I held on to the positions, but I decided to close the first one for a very small loss, and I decided to close the second one for a slightly bigger loss. But what's more important was that I was able to get out of these positions even while having a strong conviction in the trade. You see, I got out for a small loss in the first one and a slightly bigger one on the second because I wasn't married to these trades. I didn't let my conviction for a lower euro pound control the way that I manage my risk on my trades. I simply cut the losers for smaller losses because they potentially could have ended up as much bigger losses at the end of the day. So it didn't work out that way. I would have closed both of them in profit had I held on to them. But the point is that I didn't allow that conviction to sway me from my risk management processes. So the point of this video then is not to, confuse conviction with risk management. Don't ever do that. Don't allow your conviction to control the way that you risk manage a trade. Just because you are so sure it will work doesn't mean opening up your account to unnecessary risk is ever a good idea. It's never a good idea to do that. And of course, there will be times when you might want to up the leverage in a particular trade like I did, especially if it's massive news announcements that completely catches the market by surprise. And that there is, a quick possible 100 or 200 pips to make out of that potential trade. There's nothing wrong in using leverage in those examples. But the point of these two trades was with both of them, I entered with a lot of conviction and used a little bit of leverage. And the point is that even though the conviction was strong, even though I felt that both trades had momentum to the downside, I never bet the house because of that conviction. Always use proper risk management processes to make sure that you stay in the game. Yes, conviction is very important. It helps us to navigate the noise, but nothing replaces sound risk management processes for your trading plan. So always, please do keep that in mind.